Yeah,
That's
some of the
all we need.
changes that you're making on the website I thought was pretty hilarious. The idea of the monkey I thought was hilarious because, on the core group page, core group US page, you've got that little monkey and you're saying you're getting rid of him.
Yes.
And the monkey's finally off your back.
That is
And
correct. That is correct. I'm sad to see him go, but Corey will live on as our mascot, always in our hearts.
Corey for core.
Yes.
I love it. Yeah.
Yes.
And it's always funny when you get those names, right?
Yeah, I didn't come up with it.
Well, I want to get into it because I think, one of the things that's really important, and this is something that radically changed the way that I run my businesses.
Mm-hmm.
When I first got into running a construction business back in, we're going to say, I think it was about 2005, 2006, we were doing some of the largest houses in Canada. Some of the houses were, 50, 60,000 square foot homes. So these houses were the size of schools. And it was so much fun to do the projects, but the more fun was signing those big contracts.
Yes.
You get those multi-million-dollar contracts and you're like, oh, this is amazing. This is awesome. We're going to crush it. And everybody gets all excited about revenue.
Mm-hmm.
Then after you start to, this is back when I had hair, and after you start to lose a bit of your hair, you realize that revenue is vanity. And that's where, looking at your book, The Profit First for Creatives book, I thought it was really interesting. And it's funny because it's also very niche that you're really addressing with this.
Yes.
And so I wanted to kind of, first of all, get what drew you to the Profit First model, number one. And then number two, why the bridge for creatives?
Well, I heard Mike Michalowicz, author of Profit First, speak at an EO event in Oklahoma City the year that he published the book. And his story was very compelling. And I recommend people buy his book and read it just for that story. As a matter of fact, I interviewed him. His episode is up on my podcast, The Profitable Creative, and he retells that story. It resonated with me because it was my story in a lot of ways, where profit was elusive at times, and this whole idea of plowing all your money back into your business to grow it as an excuse to not make the money that you are supposed to make or should make. And so it was just his story was my story, and I bought in immediately. I joined the Profit First Professionals Network, and the rest is history, as they say.
That's amazing. Now, Profit First is obviously often described as a tool,
Mm-hmm.
and I know you emphasize it more as an understanding of the intent behind the tools is just as critical, if not more critical. Could you explain the why as to why that matters and more about?
Absolutely.
Yeah.
I mean, the example I used in the book is, from a construction standpoint, is that, if you try to use a hammer to screw in a screw, it doesn't work very well. And it's because you don't know what the tool was intended to do. And, it doesn't mean the tool's bad. It doesn't mean the tool doesn't work. It's just you're not using it correctly. So to me, having the correct money mindset is more important than the tool that you have. Profit First is a great tool. As Mike says, it works 100% of the time it's implemented correctly. And that's accurate. It does. Where it doesn't work is when people misuse it because they don't really understand what they're trying to do with it.
So let's first dissect those two things, because you use the word money mindset. And obviously I really, with the Money Mindset Mentoring podcast, that is something that's very deep within me that I believe people really need to focus on. So I want your understanding, first of all, what is a successful money mindset? And then second of all, when you talk about how people could misuse it, I'd love to dive into those two things. So let's hit the first one, sure. Money mindset.
Well, we all come with beliefs, right? And we've picked them up over the years, usually a lot of it in our childhood, about what money is. And it's unique to everybody. I mean, everybody has a unique set of beliefs, but I don't think, it certainly wasn't the case in mine, that people really look at their beliefs about money and prove or disprove them. Because there's a lot of beliefs around money that people have that are just flat out wrong. and some of them that aren't necessarily wrong, but they don't serve you well. One of the most fascinating things, one of my team members asked this question, and I've been asking everybody this. What is your first money memory? Like the first money memory you have?
Yeah, my first money memory, I think back to my parents were a little bit nuts. And, I think back to when we used to do jobs around the house, and we had an accounts receivable book. And so
Okay.
when we did a job, you'd credit it. And whenever you'd, take money out to do whatever you want to go to the store, play some video games, you debit the account. And my first, and I had a memory around that, but the one that really stuck was, I don't know if you remember back in the day, there was those numbers you could call to talk to superstars like Hulk Hogan or, Randy Macho Man Savage. I didn't really realize how much, when you add up, talking, I didn't know how much it cost per minute as to talk to the recording of the Hulk Hogan, but I got caught into that mess. And I ran up a thing, and I remember running into a deficit on my accounts receivable book that I had to work off. And so that was probably the one that hit the hardest was that first money memory.
Were either of your parents accountants?
No, not at all. Actually,
That's
it's funny because it actually, to be honest, wasn't even my dad's strong suit, nor my mom's, but it was one thing that they definitely passed on. And when I got into university or even high school, and you're doing accounting, you're like, this stuff is so pedestrian. I was doing that when I was like 3 years old.
Yeah.
This is ridiculous.
Well, my first money memory it wasn't a specific memory. It's just a general memory that my dad, my grandfather, my uncles, they always had this wad of hundreds in their pocket, kind of like a gangster or a drug dealer. And why I asked that question is because it's your first memory, it's the first thing that comes to your mind. It was influential to you, right? And it's interesting to look at how that shows up for you now in your attitude and mindset about money. For me, it was there's always money. Like you can always make more money. Like scarcity of money was never a thing that I thought about. So for you, how do you connect those dots with that ledger memory?
We were always taught money doesn't grow on trees. We were always taught, save, save, save. I had a very different upbringing around the relationship with money. I think opportunity was always in abundance around growth and mindset and all these other things, that specific relationship with money was definitely something that it took many years for me to overcome of those things around scarcity, around the idea that there's so much money out there, and we don't all have to fight for it. It's there, and the printing press is running nice and true. And, there's tons of opportunity to make money. So scarcity doesn't need to be something that exists.
And I think that a lot of people, especially if they weren't raised in an entrepreneurial household, an employer household, they get that scarcity mindset just by default, because like it's a fixed amount of income, right? And so it's just about managing the expenses. But if you flip the script and think of it in terms of an abundance mindset, that all the money out there is available, you just have to be able to go get it. It really kind of changes your mindset, and it changes your business.
Yeah, and it's so interesting because when you look at the idea of profit first, the first thing that I think when somebody looks at that, they think, okay, the accountant's going to come in here, hack away all of my expenses, and we're going to save our way to benefit, rather than starting with the word like abundance. So let's take the listeners through the idea of, don't worry, we're not sitting here saying we're going to go through every line item and you got to now, count the gallons going into your car of gas. Which is still important, is to be fiscally responsible, but rather to approach it from the idea of abundance.
Well, right. So you can use profit first with a scarcity mindset. That's totally fine. It works. But at some point, you're going to run out of expenses to cut, because you have a certain baseline to run the business. You can't cut anymore. And so then how do you make more profit? Well, the way you do that is in your margin. To your point, it's not the revenue. It's what's left after the costs of bringing that revenue in that matter. And that is virtually unlimited. I go into the book, I have a whole chapter on value pricing, because I think that's the most underutilized tool in any entrepreneur's toolbox, but especially creatives, is pricing your product correctly, because most of us leave money on the table. And if you want to talk about an abundance mindset of earning profit, you have to focus there in the margin, not on the expenses.
Yeah, and I think the first thing that most people do when they look and they say, okay, I can't save myself to success, so what I have to do is I have to focus on revenue.
Mm-hmm.
And then they immediately, slingshot right from the bottom to the top line and say, okay, I'm going to pinpoint that one and I'm going to make revenue. And I can tell you, in running certain businesses, that probably can work because their margin is fairly strong just by virtue of the industry that they're in.
Right.
Some other businesses, such in the construction business or some of the other ones where, you have a lot of opportunity to make success in margin.
Mm-hmm.
And so I want to talk to you. I want you to kind of flush that out a little bit more around the idea, principles around the idea of value pricing.
So the principles of value pricing, I was introduced to it in a book written by some Australian lawyers. It was called Firm of the Future. And their premise was they're trying to kill the hourly billing model, because they said, when you think about a lawyer and their client, the lawyer's best day is the client's worst day. The client comes in, I'm getting sued, I'm getting a divorce, I'm going bankrupt, whatever. The lawyer's lights up because they're seeing billable hours, right? And their thought was, what if you would turn that into where you were both on the same side of the table? You and the client wanted the same thing, and therefore you can create value. It's less of an adversarial role, right? Where you're creating value for them and they're happy to pay it, right? They're not like, God, I have to pay the attorney again. And the principle behind it, I think, is not focusing on costs, which is what traditionally accountants and many business owners look at, is they say, well, I'm going to sell this product or service, and these are my costs, and this is the amount of money or profit that I want to make on it. And that's how they base their pricing. They stack those things up, as opposed to flipping it around and saying, what is the value I'm delivering to the client, either perceived or real? It doesn't really matter. What is the value I'm delivering? And then how much of that can I reasonably peel off, right? So it flips the whole script on what you base your pricing upon to what the customer perceives as value.
Yeah, I think the first thing that I think you really honed in on the idea is that you're both looking towards the same goal.
Yes.
And I think that's so critical, because if, again, you're looking as the buyer, that you're looking at, you use the lawyer as a great example. You're looking at them saying, yeah, they're just, they want to send me a bill for every fax, every scan, every time they call me, every time they think about me.
Yes.
They're going to be, racking up those hours. And rather than saying, okay, how can we get a compensation model that's structured around outcomes? Yes. And those outcomes are more focused in on, what it brings success to me as the client, and how can we orient around that?
Yes. And in some industries, like the legal industries, where it's been traditionally adversarial, it's hard to change that mindset. But, like my lawyer, he performs a menu of services for a fixed amount of fee. And those menu of services are actually proactive in nature to keep me from being in litigation, from keeping me getting myself into trouble with employees and employment law and all those things. Mm-hmm. And so it's not exactly lined up, because I still don't really want to pay for those things because I don't perceive an immediate value. But I've been around long enough and been in litigation that I know that I want to avoid that. So, this is a better model for me. But if you can come around the table and actually partner with your customer or client to get them what they want, and they know they want, wow, then you have value, and then you can charge.
That it allows you really to be in alignment with your client. I know with us, a lot of the things that we do around some of our programs, our compensation is directly tied to the outcomes of the client. and, the
Yes.
term of, the way that our contracts are built. So I think it makes me excited every day to work on their projects because I know that the top line is pretty exciting for both of us. And when
Yes.
you walk into the room, they're not dreading your bill. You're walking into the room, they're excited to pay you because they know when they pay you, they're getting paid handsomely.
Yes. And I think the hardest part about that is really taking the time and digging in to determine what is of value to your client or customer. That's the hard work that most people don't want to do. They just want to do, well, this is what I do. This is, I do accounting and bookkeeping and taxes and payroll, right? Great. I can tell you that none of our clients listing those items give a rips about it. They don't care, and therefore they don't value it. And so, even though I may have to do those things to deliver the value that I do, I can't emphasize that. I can't lead with that because it literally has no value for them.
Well, I think when you're building an offer for a client, I mean, one of the biggest failures most people focus in on is they talk about what they do. And I love
Yes.
that you use word deliver because it feeds right into my belief that most people will talk about the labor rather than talking about the baby. And everybody, when they get into being a parent, they do not want the labor. They just want that final product, the
Yes.
baby.
Yes. 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 100 times yes.
And so I love offers. I love offers. I love helping people build offers. It's probably one of the biggest thing I derive joy out of is
Mm-hmm.
putting together offers because I think you get a right offer, you get it priced right, you get it structured right, you get it placed right. It all comes around with understanding who it is, not the million people out there, but the one person that's going to buy and then find a million of those one people. And
Yes.
and so building it that way. When you talk about pricing, is there any specific strategies, around, again, at principles level that people should follow when they're looking at pricing?
Well, I think the default is looking at what everybody else is charging, and that's the exact opposite. I mean, I don't know, that's an anti-principle because it leads you into the same red water that everybody else is in. It's like I was talking to this woman that was starting a marketing agency, and she'd already decided she wanted to target financial coaches, and she was going to run their meta accounts, essentially their funnel. And she'd already come up with her service offerings and was working on pricing. And I said, okay, well, what are you actually delivering to the client? And she had enough knowledge to know that she was delivering leads. And I said, okay, do you know what that lead is worth to them? And she paused and she said, no, but I need to. Because that's one of the things that can come out of working through this value pricing is you may realize that you can't make enough money on it. Like at the end of the day, like I win and they win, but there's not enough money to go around. So it's important to go through that process for one, to maximize your value, but also to determine, is it the space you need to be in? Can you make the money you need?
Yeah, Gary Keller has a beautiful saying in their core values for Keller Williams, and it's win-win or no deal. And I think that's so critically important because if you price it so well that the client's like, man, this is an amazing offer, I'm totally taking it. And then the next client that takes in the next one, but you don't have enough, meat on the bone that you're going to be able to focus on this long. You're going to have to find other products, other services, or another business. You're not going to be there the next day. Well, is that in the advantage to the client?
No.
No, because you're not going to be there to service them, support them, help them with their next thing. They spent all this time building up this relationship with you, only to watch it fade away, and now they got to find another vendor.
Well, yeah, and that's one of the things I talk about in the book is you have an obligation as a business owner to make a profit. And there are a lot of interesting beliefs around money and profit, and some people think, even to the extent that profit is evil, and all of those other things. But if you are going to have long-term impact the way you want to, you have to make a profit. It's not an option.
Yeah, Grant Cardone says success is my duty, my obligation, and my responsibility. And I think a good pivot on that, using that mindset, is profit is my duty, my
Yes.
responsibility, and my obligation.
Yes. And profit first before everything else, because at the end of the day, if you don't have profit, you don't have a business.
Yeah, and then it's funny how many people out there will sacrifice themselves in their business for the benefit of their client because their relationship with
Yeah.
money is so poor that they have a profit last, if at all, mindset.
Yes. And there's nothing wrong with the idea of serving people and being compensated for it. I heard Cliff Ravenscraft, him speak. He's one of the OG podcasters. He said, think of money as just a way of your customers showing you appreciation for what you've
Mm-hmm.
done, right? And it's not something that you're taking away from them or extracting from them or extorting from them. It's an appreciation. It's value they've received, and they're happy to pay it because you did good work.
Value that they've received is probably one of the most important things I think people don't realize when they're transacting anything in business is that people will pay for value. They don't pay for things. It's not what the thing does. It's not what the thing is, what its features. What it does is what its benefits. So how does it benefit them? I mean, if you buy, a Blizzard from Dairy Queen, maybe it makes you feel good. If you buy a new car, now you can drive with confidence that it's not going to break down. So it's the value that you get out of it. And that's intrinsic to the buyer. And that
Yes.
value's got to be worth something. So if you take something from a state of zero to a state of value, that's where you need to drive your profit.
And sometimes you have to help the customer figure out what the value is, right? Especially in creative industries, marketing type activities, like they don't know what the value is necessarily to them. A lot of them come with pre-prescribed treatment because that's what they think they need, but they don't really know. So, one of the most common questions you get from a marketing agency is, well, what is your budget? And I'm like, what difference does it make what my budget is, right? What can you do, and what value is it to me? What I paid in the past has nothing to do with it. But business owners come in with this, well, I need someone to run social media and I need SEO and this and that. And it's like, why? Do you even know that you need that? Do you know what value that is to you? Like, what difference does it make? Most business owners, if you ask them, what's your cost of acquisition of a new customer? No idea. If you ask them, what's the lifetime value of a customer? No idea. Well, if you don't know those two things, then how in the hell are you going to price and value what someone can help you with it?
Yeah, we went through that with some of our SaaS products. So, which is really, I think, integral to find that value, because if you don't know that, you could be losing money every client you sign up.
Yeah, let's do more.
Yeah, let's just keep on running down faster down a hill. And I think it's really important, because if you know that your churn rate is X and you still haven't figured out how to make it better, and you need to figure out by doing more, you got to understand, you got to price that in, and you got to say, am I comfortable with that? And then really work your numbers. And I think it's so critically important.
Well, and that's why I really do like Profit First as a tool, because it meets the average business owner where they are and their normal behaviors. So, Profit First is think of it as a cash management tool for the business owners. It's not for the accountants. As a matter of fact, a lot of accountants don't like Profit First. It's for you, the business owner. It's not for the accountant. And what does every business owner do? They look at their bank account. So it's the Profit First is structured around bank accounts. So you can go into your bank account and see how much profit is there. Well, that's just meeting you where you are, not telling you, don't look at your bank account, because you're going to look at it anyway.
So why, and I want to stop you there, because you said something that interesting. Many accountants don't like profit first.
Yes.
Why?
Well, because it's more work for them and they don't really understand it. They think that it's replacing them maybe, or that it is for them to use, but it's not. It's for the business owner. And yes, it is, a little more work on their end, but at the end of the day, it's not about them. So no, I think the primary reason is they just don't understand its intent.
Interesting. In Keller Williams, again, I spent a lot of time in the Keller Williams community, and they have a book called The Millionaire Real Estate Agent. Mm-hmm. And the two mindsets around a profit first and what they show in The Millionaire Real Estate Agent is they say, okay, well, great. You want to make this amount of money. Let's structure your business so you know what your top line revenue needs to be. So you hit that, because most real estate agents, when they get into the business, it's how much do you want to make? $100,000. And they go, okay, so I need to do 10 transactions at $10,000 each, and I got $100,000. You're like, no, that's not how it works. Right. You're going to pay this in Canada. Anyways, we pay this thing called tax.
Yes.
And you have expenses. I mean, your car's not free. Your advertising's not free. Your broker fees are not free. So you need to add all those things on the top. And then that's going to be your target, and start working towards that, rather than just saying, okay, I'm going to make $100,000 and target to the bottom.
Well, and I think that's ubiquitous with all business owners, because they don't go through that calculation. And then what happens? Okay, so you have this fear, anxiety, pressure of I need to make money, but you're not real clear on how much money you need to make. So what's the default? You take everything. And that's the absolute worst thing to do, right? Because to your point, you could be losing money on certain transactions and certain customers. But if you don't have that clarity of what you're, I don't know where this phrase comes from, but the accounting term is your nut. Like, what, cover your nut. I don't know where it comes from.
I don't know. I'm glad the camera's high.
Right. So, this is the number that you've got to do to cover all your expenses and take home what you need to make. If you're not clear on that number and what that translates into, I need to do this number of jobs, or I need to have this number of customers at this price point. If you don't know what that is, it just feeds into that fear and anxiety, and you just continue on that hamster wheel. And sometimes you get off of it. A lot of businesses don't.
Yeah. Well, their targets are completely wrong. And what they do is because their targets are wrong, then their activities are wrong. And when their activities are wrong, then everything else goes wrong. I mean, there's a quote that I quote from Brandon Dawson. It says, what you think is what you say is what you do becomes your legacy. And if you kind of work that backwards and you kind of think, okay, well, I know what I need to do based on my targets, based on the wrong formula. That means I'm going to say the things that I need to do. That means I'm going to think the way that I need to think, and everything's going to go completely down the hill.
Mm-hmm. Yes.
And that's going to get them stuck.
Well, and frankly, from our standpoint as accountants, we call that a break-even analysis. And it's one of the most rudimentary things an accountant can do. But it is of such high value to business owners that we missed it for a long time because it was too simple. Like we just overlooked it. Like, that can't be it, but it is, right? And most accountants are further down the road, and they're doing cash flow planning and tax planning and all these other things that are secondary, tertiary, that are more complex. When really what most business owners need to know is, what is that target that I need to hit?
Yeah, and the target, a lot of times money is the result of an outcome, or lack thereof is a result of an outcome. An outcome happens based on actions. Mm-hmm. And those actions are, how many times I need to smack this hammer on that nail. Yes. And how many times do I need to tell people, hey, I smack hammers on nails? Yes. And how many times do I need to get people to commit to allowing me to do that on their property? And then making sure that I have the right number of nails and I'm selling them at the right price. So all of those are the activities that are required. And a lot of people who have their focus on the P&L, or they're looking at the balance sheet, they're looking at cash flow statements, and they're looking at those things. They don't convert that into the activities that's required to make those things come together.
Yes. People have asked me, you're an accountant, you must like numbers, good with numbers. And I'm like, well, I mean, maybe, but honestly, the highest order of math that I use in accounting is arithmetic, and I learned that in second grade. So it's not complex math. Accounting and finance is more of a language, and the financial statements tell a story about your business. And the question is, what does that story say? One of the things I think is most impactful is when we can tell the story and see if it lines up with the business owner's reality. Like, I think I'm doing well. Well, what does the story say? I think I'm doing poorly. Well, this is what the story says. I think we want to grow 10% next year. But we want to increase our profit 10%. Okay, what does the story say? That's the power of the numbers and you don't need to know the numbers. You just need a good accountant to say, well, this is what the story says. And it helps you as the business owner realize, are those activities that I'm doing to achieve the goals that I want, is it making a difference?
Yeah. I've heard it related to, imagine having a game of basketball and nobody's keeping score. It's not as exciting, number one, to watch. And number two, you're never really going to know if you're doing well or not.
Exactly.
And that's the importance of having numbers.
Yes. And it's, one of the many skills that every business owner has to have. As a business owner, you need to know a little bit about marketing, a little bit about law, a little bit about people, managing people, a little bit about sales. There's a lot of things that you have to know enough of. And finances is one of them. But so many people, either because, of childhood trauma, they don't want to deal with money, or, whatever, they just think they can bury their heads and it'll take care of itself, but it doesn't. You can't.
Now, if somebody was like listening to this going, okay, I get it, mindset, I've got, I got to do some work on that. The principles of this is starting to make sense to me. What is the next step? So nuts and bolts wise, they're looking at this saying, I like this concept. What's the next step for me to take?
I think the first step, and it's an incremental step that anybody can take, is open up a savings account and put 1% of your deposits in it. Don't do anything else. Don't look at it. And then at the end of 3 months, look and see how much is in there, and you'll be surprised. And what that does is it shows you the power of setting aside money towards profit. Anybody can set aside 1%, unless you've got a really bad business. But what it shows you is how what's possible, right? Because if you can do 1%, you probably can do 2%, et cetera. And that's the first step. I think some people get hung up on implementing profit first, thinking that it's too heavy of a lift. And so I just tell them, do that one thing and come back to me in 90 days and tell me what you think. Because once you've bought into it, once you see that it actually works, it's easier to get over the hump of implementing the rest of it, which is not terribly difficult, but it can be a burden to some people.
So if somebody's, they're 90 days in, or, and they're like, wow, I was able to put that aside. I didn't really notice it. And I realized that, you kind of put something away. It's like you walk into your basement and you haven't been in your basement in a while, and all those things that you put away in boxes that, I'm going to, can't wait to look at this thing again. You didn't realize it's still there. And the basement just starts storing stuff and more stuff. And then you're like, man, I got a lot of stuff in the basement. So then you start storing in the garage, and then you start putting in the attic. Imagine if you're doing that with your profit and just putting it away, storing it, and forgetting about it.
Yes. And then opening it up at Christmas time and saying, yeah, I mean, that's one of the most powerful things, is when people get to that quarter end and they have this pot of money that they weren't expecting, and then they get to take it out and do something with it.
Now, is there a cadence of review that's required for this? Is there something where they should structure themselves to make sure that they're figuring out what they're going to do with that, distributions or anything like that? What is the importance around that?
So the cycle is quarterly, right? So you set your targets for your upcoming quarter, and you work your profit first percentages based upon that. And at the end of the quarter, you have this pile of money in the profit account, and you the prescription, the way I recommend it and the way Mike recommends it, is to take out half of it and spend the rest of it on whatever you want. It can't be on the business. It's got to be something for you or your family. It could be a vacation. It could be a car. Whatever. Then as you do that over a period of like 18 months, what's happened is that 50% that you've retained in that account builds up, and that becomes what we call the vault, or in accounting parlance, it's working capital. And once you have that vault built up, this amazing thing shifts, because now you're not concerned about the immediacy of cash and the immediacy of profit, and even that break even becomes less important, because you know what, if I don't sell what I need to next month, it's still okay. There's money in there to cover it. What happens is your mind starts shifting to the future, and you start to be more proactive about your business decisions. And it's incredibly transformational. It was for me, and it is for everybody that I've known that has come up with that. But where the problem is most people that are not making the profit that they should or they want, the idea that, well, I'm not making I'm not making enough money now. How am I going to build up a reserve? Right? That's pie in the sky. But Profit First allows you a process to do that.
There was a fellow I knew a long time ago. He ran a spray foam company. His name was Paul Waggle. And I remember him telling me this early on, and it just stuck with me. And he said, when you have profit, you can stop working on urgent and you can start working on important.
Yes.
And that was something that just, it resonated with me. It took a long time to actually implement it, but it was definitely something that sat within my head. And I was like, man, that's so profound.
100%. And for a lot of people, it's just the idea that that's possible, right? But and so they don't think it's possible, so they don't work towards it. But yeah, most business owners are in urgent mode. It's firefighting. It's, whether it's operational or financial, it doesn't matter. It's like I'm worried about the pressing issue of the day. Sometimes those things are important, but the reality is, if you don't have the headspace to deal with it, you're just putting Band-Aids on it. You're not truly fixing the underlying problem, right? And so when you move into working on the important rather than the urgent, it's transformational to the business.
Yeah. Oh, absolutely. I think I love Brazilian Jiu-Jitsu. It's one of my favorite things to do. I think martial arts are so crucial for development, not only physically, but mentally. And one things that I really teach the people that I coach is around the idea of stress management. And, when people are in competition mode, or even they're in a fight on the street or whatever, they're in a high degree of stress. The military, same thing. When they're in a gunfight, they're in a high degree of stress. And most people think they're going to operate at their highest level, and that's just not the case. To the degree that you are under stress is to the degree of which you're going to be away from your lowest form of training. The higher the stress, the more close you are to the bottom level of your training.
Yes.
And one thing I think that people, through a profit first model can really adjust is the relationship with stress. Because if they can pull that stress down, they actually don't have to do anything better. They're just reducing their level of stress, which means they're increasing their level of relationship with stress. And so therefore they're moving up their ladder of skill that they already have, but they're able to operate at a higher level.
Yes. My Sifu said something very similar. You train to a 10, but you're never going to perform at a 10. That's, and so increasing your skills so that your baseline is higher is important, but you're never going to be actually implementing that. And so many people think that, well, if I just work harder, and if I just work faster, or I just do more, what they're not doing is increasing their base level, right? They're trying to perform at a 10 instead of building that base so that their 5 is now past where their 10 was.
You never have to perform at 10. You can perform and do amazing things at 5 over and over again.
Yes.
Gary Keller talks about this. He talks about, intensity, comes through consistency. It's not about the idea of that you have this one moment that's going to make all moments. Right. It's that you're just going to have a moment, you're going to have another moment, and you're going to have another moment. And well, I do believe there's one thing, around the fighting. When I watched a match once between Cody Garbrandt and Dominic Cruz, this is a UFC fight. And when you watch Cody Garbrandt in that fight, that was one moment when you could see somebody almost operating as close to the level of a 10, because he was operating in joy. He was operating in flow. He wasn't stressed. You could see everything was fluid, and he's just slipping and moving, and his footwork was everything was perfect in that one fight. And then his next fight, where he fought that blonde fellow, I forget his name, he was all emotionally engaged in the fight. You could see he'd lost the mental game. His footwork was off. Things were a little bit odd. He got caught, and then now he's on his step down, and he gets caught again, and he gets caught again. But that moment, for that one fight that he had with Dominic Cruz, man, that was the closest I've ever seen somebody do a 10.
Yeah, and occasionally you will break through to those levels, but you can't depend on it to build a business or to live a life, because you're not always going to be at an 8 or 9.
Absolutely. That's the sustainability side, is that sustained success, like true success, comes through being able to sustain. And when you're making a business, it's not for a week, it's not for a day, it's for hopefully generations. And to be able to do that, yeah, you've got to be able to do that with consistent 5s.
And cash, that you said revenue is vanity, profit is sanity, and cash is king. And you will not alleviate financial stress in your business without cash. And so you can't ignore it. And you don't have to work harder to get it. You just have to change your mindset that it can be done, and the tool that you use to do it.
I love it. And it's so true, because I know I can look back when I focused on revenue, and revenue was, it was the number one thing. It was the thing that you get the awards for. Mm-hmm. It was the thing that you get to step on stage and everybody's looking at you and you're amazing. And they don't know, but maybe some of them do, that behind the scenes, everything's falling apart. Yeah. You're missing some payments. This is going wrong, and you get taxes issue and this problem here and whatever happening here, because the profit's not there. Yeah. And the profit's not there. So therefore the cash isn't there. And then once you get that stabilized, like I know the first time that when we started running a business and we had a significant amount of money just sitting in a bank account, which I know, some people say it's bad, but for me, it wasn't like millions, but it was enough sitting in a bank account that I knew that, for the next months and months and months, we had payroll covered. And doesn't that feel good? Doesn't that feel good knowing that that's there? So now you can make those decisions to say to that client, I'm sorry, I don't think this is going to work out. I'm going to fire my client. Mm-hmm. And you can feel perfectly comfortable doing that, because I've been on the other side where you're taking that client, like, I really don't want to work with this person, but I got to make payroll. And that's not a place to be.
Yeah. And going back to, the beliefs, I think that there was, for me anyway, there was a belief that, growth covers all problems. Like if you just make that next sale, right, it'll solve your problems. But that doesn't work in the long term. It may fix the short term, but it doesn't. And as long as you're focused on that growth, you go to a group of entrepreneurs, I don't care what group you pick, and you listen in on their conversations, and it's going to be around revenue size and growth and number of employees, headcount, all of those things. You'll never hear the word profit uttered. No one will say, well, I only made $20,000 last year, or I don't know where I'm going to make payroll next week. Those things are there, but they don't talk about them.
But that's built into the DNA of society, though. I mean, if you look at, I own a mortgage business, and in our mortgage business, when you're telling somebody, okay, so how much did you make last year? They're like, oh, I made $100,000, right? And they give you one of those looks, like, yeah, I made $100,000, and we live in Canada,
right?
So the first thing is, I'm like, you did not make $100,000, my friend. What does it say in the bottom? Now, in the banking world, we look at the top line for some ridiculous reason, and then we have some crazy algorithms to work it down to say it's affordable. But really, at the end of the day, we should never be talking about what we make gross. We should always be talking about what we make net as business owners and as employees. Because if we talked about what we made net as employees, people would have a very different perspective on what they spend on taxes.
Absolutely. And to take that example even further, if top line and revenue was really your only goal, well, then you would just give shit away. Like you just sell it as cheaply as possible. And that's an easy formula for growth. Doesn't mean you're making any money, but growing the top line's easy. Be cheap.
Absolutely. Absolutely. Yeah, I think, if somebody looks at it and says, okay, well, number one, mindset wise, I recognize where I've had limiting beliefs in the past, and I know I need to break those cycles. I need to get out of the idea of scarcity. I need to get into the mindset of abundance, and I need to know that to exhibit that abundance, I need to have a right structure, and that structure is a profit first model. I'm ready to implement that profit first model, and then the first thing I do, I'm going to start with just a simple 90-day 1% plan. 1% every month of whatever I make, I'm putting away to a do not touch account, and that do not touch account is just going to start to grow. And then quarterly, I'm going to look at it and say 50% of that I'm going to pull out and 50% of that I'm going to leave in. And that 50% that I pull out is not going to buy another impact gun. It's not going to go out and buy another software program or pay for another marketing program. Correct. That is going to go to something that is rewarding outside of the business. And that's going to be a distribution.
Yes.
What did they do next after that?
Well, I think implementing the full profit first methodology with the 5 accounts allows you to take that even further. The first thing we start with is an instant profit assessment, which basically looks at your historical numbers and tells you, okay, this is what your profitability is. Then we go through an exercise of what we call a quarterly improvement plan, which is, okay, so this is where you are. Where do you want to be? Where could you be? What is the potential over the next 12 to 18 months? And then stepping it out quarter by quarter to say, this is how we're going to get there. Because you can't, you don't go from not running at all to running a marathon. You'd hurt yourself. You have to implement these changes gradually. At some point, like we said, you're going to have cut all the expenses. So then the conversations become more strategic, and they come more around margin and pricing and finding the right types of clients and marketing. And so the decisions become more complex, but it's still the same concept of how do I move that needle just another 1%? I mean, and it's at some point you're going to reach a level where you're making more profit than you thought was possible. And then it becomes a question of, okay, if I squeezed all I can out of this company, is it time for me to sell it? Is it time for me to start another business? The conversation never ends, but the process is the same.
So it's actually interesting when you look at what you just said around the small changes. And, most leaders and visionaries, and they like to think big, right? But I always love the saying of most people overestimate what they can do in a year and underestimate what they can do in 5. I think it was Bill Gates or somebody who said that. And in that small change, if somebody makes a minor adjustment of 1%, and then 3 months later makes another one and adds maybe another 1%, and adds again another 1%. They're 4% gross profit, or net profit actually going into an account. That can be pretty significant.
Well,
And it's also something
over 5 years, you're talking about 20%.
This is amazing. It's unbelievable. And if you can
Which
do
for
that,
a lot
that's
of
huge.
businesses would be doubling their profit.
100%. Just in the construction space, maybe quadrupling it, but
right.
And so I think that's really important. And small changes where they're really important is because if you're driving a car and you make big changes every time, like people are going to get whiplash in the back seat. Whereas if you're driving the car and you make smaller changes, you're going to have a lot better relationship with the process going through, and you're going to be able to see things and adapt and pivot, a lot more effectively as those changes are happening.
Absolutely.
Yeah, no, I love that. I love that. And so for people to get things going, I think number one, first of all, I think getting the book, I think is so critically important, and really diving into this concept. It's something that really speaks to me. It's something, it's been part of my journey. It's been a tough part of my journey, which is, you're fighting a mindset of scarcity that you grew up with. You're fighting if you're a giving mentality, you fight that as well. But as soon as you get over those, you realize it creates sustainability. And I think my wife was the one who really helped with that, around the idea that she was a paramedic for 15 years. And if you're a paramedic and you go out and you say, I'm going to put the client first, which means you're going to put yourself at risk, you just become another liability on the site, and you're not going to help anybody. And if you truly want to help somebody in long term, if you truly want to give and you truly want to create sustainability in your business for your employees, for your clients, for your vendors, for your investors, and for yourself, having a profit first mindset is what's truly critical.
Yes. Agreed.
My man, I love the chat that we have with you, man. It's something that I was really excited about this talk, and it's something that really is internal for me, and it's something that has been transformational for me and over a long period of time, and probably still over a long period of time going forward. So really enjoyed having you on the show.
Well, thank you, Steve. I appreciated our time. Thank you.
And for people to get a hold of you, they can, first of all, I got this book off of Amazon. It delivered, I think, in like 2 or 3 days. It's great. For creatives, I think it's definitely something that industry, I talk to a lot of people in that industry, and this is something that I think you definitely need to have sitting on your shelf, sitting on your brain, and really putting it into your business, into practice. So go to Amazon, go look it up. It is Profit First for Creatives, written by Christian Brim. Christian, it's been an absolute pleasure having you on the show, brother.
Thank you, Steve.
And guys, this is the money. This is the mindset. This is the Mentoring Podcast. We'll see you on the next one.